we talk about Tesla's market share, but it's obviously calculated by quantity of BEVs sold. The more you sell, the higher your market share. For this reason, the Wuling EV, despite only having a 9 kilowatt hour battery, still gets a reasonable market share, even though they have a lot lower battery supply than Tesla. For example, up to about September this year, the Wuling had sold about 250,000 EVs, whereas Tesla only 150,000. Of course, these are only Chinese sales. Tesla produced a lot more than that in China and exported them. But it could be argued that the Wuling sold 2/3 more EVs in China than Tesla, as they literally did. But the fact is that the Wuling only sold EVs with a total of 2.5 gigawatt hours, whereas Tesla sold EVs in China with 9 gigawatt hours. In other words, Tesla sold nearly 4 times as many batteries in EVs than the Wuling. And like I said, this doesn't even include all the Chinese-made Teslas due to exports. This will change somewhat when Tesla start exporting to Europe from the new Berlin factory. So how do we calculate market share then? What would be a more fair comparison in how we measure the success of individual companies relative to the industry size? Well, as we mentioned, what about actual battery supply then? Would that be a fairer comparison? Yes, it would be, and especially when we look to the future of what supply Tesla will have. Not only is Tesla the largest consumer of batteries already from third parties like CATL, LG and Panasonic, well, very soon they'll also start delivering cars with their own in-house batteries, especially when we hear Berlin should reach 250 gigawatt hours of battery production, and then probably at least the same again with Texas. These are huge numbers, and this is with nickel batteries. Look at the pace CATL are ramping up their battery production using iron-based batteries. When Tesla release their LFP batteries, then it's likely we will see Tesla battery production ramping up to even faster levels than the 4680s. Now bear in mind, Tesla are making tabless batteries using cylindrical forms with dry battery electrodes. All of these three factors increase production speed at least by 10, in about 1/10 the footprint that the likes of CATL require. Although, I've heard some sources say Tesla can produce at 100 times the speed. But not all batteries are created equally, nor are all batteries utilized equally. For example, we know how much more efficient a 4680 battery is over CATL's LFP batteries, so it's not like for like comparison. And we also know how much more range a Tesla will get on the same battery compared to literally any other EV manufacturer. Therefore, battery supply is not going to be a good enough comparison for market share either, but I think I know what might be, or at least a different measurement that will give us more perspective on how truly amazing Tesla's market share is, that goes underrated. Something that factors in Tesla's battery supply, battery efficiencies, along with all other efficiencies like powertrains, software, motors, and even their weight reduction. What is it? Can you guess? How about market share of total range produced? As in, combine all the cars a BEV manufacturer makes and take all the range of each car, then combine all the ranges of all the cars produced, and then work out Tesla's market share from there. I think this would be an interesting metric, and considering that so much of the market share of BEVs is actually Chinese cars with really small batteries and minimal ranges, then Tesla may end up scoring a lot higher than we think. Look, basically all I'm saying is that Tesla's market share has become a bit distorted, especially in China. Well, for starters, Tesla exports a lot of their China-made vehicles, a lot more relative to the Chinese, of which some are only even sold domestically. But what the Chinese EVs have also done is create new market segments that are then consolidated into the overall EV market and thus dilute Tesla's market share as a result. We hear reports that the Chinese EV's auto market share has increased from 5% to 20% or something. Now, whilst this statistic, again, you know all what I think of statistics, can be true, like any statistic if you want to illustrate a point. Well, this statistic is said as if it's eating up market share from other vehicles, like legacy autos for example, but it's not. We have new categories of micro EVs that are attracting new consumers that could not previously afford a new car. This is somewhat arbitrary. Do not rely on statistics. As Mark Twain said, there's lies, damn lies, and statistics. You see, a great example, and there are many others, is the Wuling. The car is under $5,000 and has a 9 kilowatt hour battery. Now, in no reality whatsoever is Tesla ever going to directly compete with this vehicle, as in Tesla are not going to make a $5,000 vehicle or anything close. Tesla's most important things are safety and what's good for the environment. You can't make a car for that price. There is sheer physics involved when it comes to safety. All else being equal, the bigger the car, the safer it is. Even when Tesla get down to their compact car, it will have to be safe. This will not be as easy as, say, a Model X. But with new advancements like the structural battery pack and more efficient batteries, means that the batteries will be weighted more towards the center, and the circumference around them will be able to better protect the passenger. But if you go much smaller, then this does start to lose its safety aspect. I don't think Tesla will ever go any smaller than the Compact, despite what ARK Invest seem to think in their rather peculiar 2025 price target for Tesla. Don't get me wrong, I have full respect for Cathie Wood. She wasn't afraid to put herself out there saying that Tesla would reach these absurd valuations, and ended up being closer than anyone else on Wall Street. But the Tesla 2025 price target from ARK was very strange indeed. I would not read into it too much. It is not a real price target. It is a prospectus to invest in ARK, as it should be. Cathie's intention is not to tell you how successful Tesla is going to be. She's acting in her own self-interest. She wants to get you to invest in ARK. If her price target said Tesla would be $10,000 by 2025, then wouldn't you just buy Tesla stock instead of ARK? Not only was the entire energy business left out of this target, but they also introduced a $15,000 Tesla called the Neighborhood Tesla, and expect it to have been selling in large quantities before 2025. As it is, Tesla is struggling to get their first compact car out by perhaps 2024. They're not about to release another, even more compact version shortly after that. This was strange. Also, I'm looking forward to doing my own 2025 price target. I've started working on my 2022 as it is, but I want to really pride myself on these targets, and I hope they become some sort of benchmark, hence them taking so long. I did create my 2025 price targets earlier this year, but this is Tesla. So much more information comes to light continually. It's a moving target. For this reason, I don't think you can really take anyone's price target seriously unless they are updated regularly. I plan on keeping mine up to date every 6 months or so, but some targets like ARK will keep enforcing theirs for perhaps years. Look, I think there's a good chance Tesla breaks ARK's price target even next year in 2022. What's the point of trying to reinforce the same target when the company has clearly changed so much over that time? It's okay to say something like, oh, I didn't predict Tesla would start making robots, and readjust accordingly. Anyway, the Chinese are adding all these other vehicles in the EV industry with small LFP batteries and small ranges with poor performance. But if there is a market for them, then so be it. But like I say, they're diluting Tesla's market share. I mean, where do we draw the line? An electric bike is also literally an electric vehicle. Should we include those too? I think we should perhaps classify an electric vehicle with a battery of something like a minimum of 30 kilowatt hours. Then we'd have a more realistic market share of EVs. Anyway, I repeat, these micro EVs are cheap EVs that dilute market share. They are not taking Tesla's market share. How could they if Tesla continued to sell more vehicles every quarter? The market is growing faster than Tesla can grow, and mainly due to these shortcuts, for lack of a better word. Also, I say Tesla will not compete head-to-head with these cars, but they will likely eventually compete for this target market, or consumer, when the Robotaxi is launched. On the other hand, maybe even the Robotaxi would struggle to actually become cheaper to use than a Wuling, so who knows, although it would certainly be a lot nicer and safer. Either way, not only are these vehicles not direct competition to Tesla, they barely scrape the definition of an automobile, at least nothing serious. And if you use a battery 1/5 the size, then you'll have enough batteries for 5 times as many cars. Plain and simple. You're removing battery constraint by removing the batteries. But let the Chinese do what they want in China. These cars are not export quality and won't pass regulations in developed countries. The other aspect is that it would appear that most of these Chinese EVs don't have the waiting lists like Tesla's. So despite Tesla are only selling so many, Tesla are getting a lot more orders than they can make. This could also be factored into another variant of market share, like share of market demand perhaps. Either way, all the research I ever do just makes me keep realizing how truly amazing Tesla is. Some people think I just say this because I'm such a fan of Tesla. Well, why do you think I'm such a big fan? Because they're that good. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.